Hola.
Hola, hola. How is how is everybody today?
Hello?
Hey,
Hello.
how are you, Paul? You look awake today.
Well, it's a later. It's not the crack of 6:30.
That's right.
How we doing today? Very windy in Connecticut,
Is it? Is
Is
it
it?
cold?
30 degrees.
Oh. Yeah, we had a blizzard 2 days ago. I mean, it was like 60 degrees in the morning. By 6:30 at night it was blizzarding. So
Wow.
it's supposed to be 70 on Monday though. So we're in that transition over to spring. So
Yeah, you don't know whether to wear a jacket or put on your shorts.
I know I wish I could put on my shorts. That's what I want to get to.
Get those crazy guys out there wearing shorts in cold weather. You see them.
I don't know who they are, but they either have no brains or they have no nerves, because I
Right.
look at them and I freeze.
Yeah. Let's see here. I don't think this went out. Let's see now.
There's Scott. He got his big old dog behind him.
Morning.
Morning.
How are you, Bob?
Well, let me say this. The gentleman, no, that's Mark that we talked to. I'm sorry, I've only attended the Morning Edge once this week. And unfortunately, other things have to become a higher priority. But Mark, you mentioned snow. I think it was on Wednesday.
Yeah.
And then there's a gentleman, and I don't know if the guy's down here, whether Brad is the one from Illinois. He said it was coming his way. By the way, all stuff comes from the West. So I sit here in Western New York. I'm a 9 hour drive from Chicago. So I expect
Oh,
that
wow.
storm to be hitting us. I can't believe it. It must have went north of us.
Yeah.
So we were not the beneficiary of it.
You've had enough punishment this year, so you don't need any more.
You know something? I have lived 3 months in purgatory.
Yep. I
And,
call
you
I call
know,
that hell.
and I've lived here all my life and I've seen bad, but in the past 2 years, we had very mild winters. That's why I thought less that I would have to move to another location. Boy,
Oh,
I'll
it's a
tell
little bit.
you that I learned.
Paul's showing us a little windy out there in Connecticut. Not much snow.
Oh, there's no snow.
Yeah.
Huh? Nice.
Yeah, that's about what it looks like here. The snow melted the next day. It was like 40 some degrees. So I'm going to get going because we got a lot today, and I'm sure you guys have a lot. And as people pick up and just pick up and get on. So today I was thinking, and I've been thinking about this a lot, just watching financial news and things. And, the tariffs have been a big source of news, and that's what everyone's talking about. So today I named this to tariff or not to tariff. That is the question. And it's so interesting to watch this all play out. Like the tariffs are what's wrong with all the economy and everything has pivoted around the tariffs. So I'm going to do a little history of what we've seen just this week, which has been all over, which has been normal, I guess, if you call that normal for the last 6 weeks. Uh, and then kind of go into my thoughts of it. And I want to get you guys' thoughts of it. But, as of March 4th, the U.S. placed 25% tariff on the majority of goods coming from Canada and Mexico. And then additionally, certain energy resources from Canada faced a 10% tariff. And then they increased China's tariff by 20%. And the reason for that uh, was that the U.S. government cited concerns related to immigration and flow of fentanyl as a primary justification for these tariffs. They're complex issues, and government has taken this action to attempt to address them. So they're trying to stop the flow of fentanyl, which is terrible and has killed a lot of people, a lot of young people. So, that's kind of the backing of it for these tariffs. And then, was it yesterday or today? No, it was Tuesday or Wednesday. The government granted a 30-day tariff relief exemption, especially for automobiles from Canada and Mexico. Uh, and this decision was made after concerns were raised by U.S. automakers, including Ford, General Motors, and Stellantis. They expressed that the newly imposed tariffs would severely disrupt their supply chains, lead to increased costs for both manufacturers and consumers. So that happened this week. Okay. So that was just basically for cars, vehicles that comply with the United States, Mexico, Canada agreement, the USMCA. So, that was temporary relief for automobiles. Broader tariffs on other goods from Canada and Mexico at that point remained in effect, and the increased tariffs of Chinese goods were also in effect. So then they had some phone calls Thursday between the Trump administration and Canada and Mexico, and they decided Mexico and Canada won't be required to pay tariffs on any goods that fall under the USMCA until April 2nd. So it's a fluid situation, these tariffs. Okay, so I don't know for me personally how many have actually been implied on, not taken up, what the whole deal is. I don't think anyone knows right now. But the financial news networks are like, tariffs are causing this issue, and they're probably a catalyst for the market. Okay, I'll give you that much. But the real thing, furthermore, on April 2nd, that's when these reciprocal tariffs are going to go into place. And these are interesting when you dig into what they are. They refer to tariffs, the taxes charged on imported goods the U.S. government plans to levy against our trading partners that are equal to the existing tariffs foreign countries have set against American goods. So very simply, it's if they charge us 15% for widget X, we're going to charge them 15% going the other way for widget X. So President Trump argues that such measures will equalize the playing field for the U.S. in regard to global trade. And so you think about that. If I am a widget maker and I try to export my widgets to India, and India has a 50% tariff on my widget, and so that makes it 50% more expensive than a local vendor who might make the same type of widget. And then they can import their widget, same one, into my country for 5% tariff, making it more competitive and competing with the company here. So that's kind of the thought process behind the reciprocal tariff. So let's look at a couple examples that are out there right now that I looked up and found. So the U.S. tariff on ethanol is 2.5% to Brazil. Okay, so we ship in, or they ship to us ethanol, and we charge 2.5%. If we ship ethanol to Brazil, they charge 18%. So as a result, in 2024, the U.S. imported over 200 million in ethanol from Brazil, while the U.S. exported only 52 million in ethanol in Brazil. So under reciprocal tariffs, the tariff would be raised to 18% as long as Brazil had 18. If Brazil wanted to go to 20, we'd go to 20. Brazil wants to go to 5, we go to 5, or 0, we go to 0. Trying to equalize trade. So it's actually trying to make trade more free on these reciprocal tariffs. The U.S. average applied most favored nation tariff on agricultural goods is 5%. Okay, so 5%, you import to the U.S., it's 5%. If we, the U.S., was exporting to India, the tariff on food is 39%. And they also charge 100% tariffs, India does, on U.S. motorcycles, whereas Indian motorcycles coming here is a 2.4% tariff. Okay, so again, trying to equalize that out. For the European Union, you guys like shellfish. The European Union can export all the shellfish it wants to the United States, but the EU banned shellfish exports from our states, despite committing in 2020 to expedite approval for shellfish exports. So as a result, in 2023, the U.S. imported 274 million in shellfish from Europe, but only exported 38 million to Europe. And Europe also imposes 10% tariff on imported cars, yet the U.S. only imposes a 2.5% tariff. And then on top of that, if you're a company, American company, there's a digital service tax in Europe. So American trading partners in Europe will charge American companies for something called this digital service tax. Canada and France use these taxes to collect over $500 million per year from American companies that we don't tax them on. And overall, these non-reciprocal tax cost American firms over $2 billion a year.
Didn't ship anything yet from
So in 2019, a report found that across 132 countries and more than 600,000 product lines, the United States exporters faced higher tariffs more than 2/3 of the time. So these reciprocal tariffs are trying to even out these tariffs. So at some point, I expect that a lot of these will be negotiated and eased out, my opinion only, and I'm going to look forward to your opinion. And it's actually going to be a good thing for the United States, and I think for free trade across the world. So when you look at what comes into the United States, currently 70% of goods that enter the US are duty-free, tax-free. So the current administration believes that these reciprocal tariffs will bring back fairness and prosperity to the unbalanced international trade system and stop American companies from being taken advantage of. Okay. So I don't think current market shop is being created just by these tariff concerns. I think it's a catalyst. But I think there's other things that we have talked about for the last year, if not more, that are starting to come to fruition. And I'm going to start with GDP. Okay. So the US economy expanded at an annualized rate of 2.3% in Q4 2024. And that was the slowest growth in 3 quarters. So this was before the new administration came in. Okay. Down from 3.1% in Q3 and in line with advanced estimates. Personal consumption remained the driver of growth, okay, increasing 4.2%. Government expenditures also rose 2.9%. This was Q4. So the economy has been slowing prior even to these talks of tariffs. Now, what happened last Friday and Monday, the Atlanta Fed model looked at what's happening and slid deeper into the red on Monday, estimating that the Q1 GDP will sink 2.8% on a seasonally adjusted annual rate from the 1.5% they estimated the Friday before. So they're saying we're going to have negative GDP. They factored in Monday's release of the February ISM, which brought its estimate of consumer spending down to 0 from 1.3% on Friday, and private fixed investment growth to 0.1% from 3.5% previously. So on Friday, the regional Fed said it estimated Q1 GDP fell 1.5% compared with its previous estimate of 2.3. So now they're saying negative 2.8. So if you go and you look how GDP is calculated, GDP equals consumption plus investment plus government spending plus imports minus exports. Okay. So let's look at each of these areas separately and see why the Atlanta Fed brought this down. So let's talk about consumption. Okay. So consumption represents personal consumption expenditures. That's us. Okay. Which includes spending by household on goods and services, food, clothing, healthcare. And this is the largest component of the US GDP. And we know we spend our economy, 65-70% consumer spending. So when I look at the outlook for consumption and over the past year, we look at all these reports, we talk about them, they're boring as hell, but we do. People need money to consume or buy things, but where does that money come from? What comes from their jobs or their business? Okay. So job growth, as reported by the government, has been steady over the past year. However, when you looked under the hood like we did, we found a lot of the jobs were government jobs and are mostly part-time jobs filled by non-US citizens. Okay, we've been talking about this for a year. Now, this has all changed since the new administration has come in, as open borders have been closed, government hiring has been shut down, and spending's been put on hold. Okay, that's going to affect GDP. US-based employers announced 172,000 job cuts in February, and that's the highest total for the month since 2009, when 186,000 jobs were cut. If this is the highest monthly total since July of 2020, when 262,000 cuts were announced, according to the report released Thursday from global outplacement and business executive coaching firm Challenger Gray and Christmas. So far this year, market economic conditions attributed to 36,000 job cuts. Bankruptcy was the reason for 35,000 job cuts. Store, unit, or plant closing caused 28,000 job cuts so far in 2025. As a contrast, we just had the jobs report come out from the U.S. government, reporting this morning that the U.S. economy added 151,000 jobs in February, up from the downwardly revised 125 in January, and compared to a forecast of 160,000. Employment trended up in healthcare, financial activities, transportation, and warehousing as social assistance. Federal government employment declined by 10,000. Okay, Challenger Gray and and Christmas said government went down by 60,000. Okay. So when you look at that, okay, no matter how it happened or whatever number is true, if jobs are coming down, people are more unemployed, they're going to spend less. Okay. Um, because they're worried about paying for stuff. So consumers have already been slowing their spending, as companies like Best Buy, Target, Walmart, and Costco have reported Q4 earnings. This is Q4 earnings before all this. Both Costco and Walmart have reported more foot traffic, but from higher end buyers, which is over $100,000 a year kind of buyers, as shoppers turn to wholesale clubs to deliver value in the face of high prices elsewhere. So when you think about that, how have, consumer spending has been up, and it has been the driver of the economy. How can that be? Okay, where's the money come from? Okay, how has the consumer spending been able to hold up during these inflationary times? And from my point of view, I'm looking at it, one word is debt. So the total amount of household debt in the US has surged to new record levels. In its quarterly report on household debt, and again, this was Q4, the New York Fed says total household debt hit a 21-year high of 18.4 trillion at the end of Q4 2024. That's an increase of 93 billion on a quarter-on-quarter basis and 3.9 trillion surge since the end of 2019. The New York Fed data also shows that Americans are struggling to pay off their credit card and other types of debt, as delinquency rates are on the rise, with 11.4% of credit card balances having been left unpaid for at least 90 days as of Q4 2024, and that's up from 9.4% over the same quarter in 2023. For other types of loans, 9.2% are delinquent for 90 days or more. Meanwhile, 4.8% of auto loans, 0.7% of mortgage, 0.5% of student loans, and 0.5% of home equity lines of credit are delinquent for more than 3 months over the same period. So aggregate delinquency rates increased slightly in the fourth quarter of 2024. As of December, 3.6% of outstanding debt was in some stage of delinquency, up from 3.5% in the third quarter. Transition into serious delinquency, defined as 90 or more days past due, edged up for auto loans, credit cards, HELOC balances, but were pretty stable for mortgages. Amid the surging delinquency rates, the Fed says around 123,000 Americans had bankruptcy notations added to their credit reports as of the last quarter of 2024. So if people lose their jobs, how will they pay off debt? Okay. Also, with no jobs, what happens to the government revenue from income taxes? It goes down. Okay. So that's the first part, consumption. Okay. So consumption is coming down, debt's going up. Second part is investment. This includes business investment in fixed assets, equipment, buildings, changes in business inventories, and residential investment, new home construction. Many companies reported tightening margins, was cutting into company profits. Just yesterday, Marvell Technology stock price was rocked as analyst Summit Insight noted that increased competition in custom AI ASIC market could result in additional pressures on gross margins. The brokerage added that Marvell's expectations are too high and it lacks the financial leverage to achieve them. The same has been reported by Dell and HP, among other companies. Even NVIDIA said first quarter margins would tighten to 71% from 73.5%, lower than Wall Street's estimate of 72.2%, as it ramps up production of the Blackwell AI chip. The gross margin forecast, which indicates the company's efficiency in managing its core production costs and generating profit, was disappointing. AI spending has been the driver for most of the business investment over the past few years. However, with the introduction of DeepSeek and other AI products from China, that spending is now in question. We've seen that through Microsoft's reports. Okay, we're still going to spend, but just how much are we going to spend? How much are we monetizing this? And just this week, Chinese tech giant Alibaba unveiled its latest artificial intelligence reasoning model on Thursday, boasting that its capabilities beat rivals like OpenAI and DeepSeek. Okay, so we're seeing now how much investment are we going to have? We still have investments going into data centers, but how much is a company that's losing margin going to put back in to spending in these times? We'll see. The third thing is government spending. So this represents spending on goods and services at the federal, state, and local levels, infrastructure, defense, education, but it does not include transfer payments like Social Security or Medicare and Medicaid. So it appears, at least for the present, as anyone as old as I am knows, that Bill Clinton once said the era of big government is over. DOGE has found billions of dollars of waste, fraud, and abuse in federal agencies over the past 6 months. with more to come. It's apparent that government spending, as we have seen over the past several years, has led to record inflation and will be slowing in the future. Things have slowed down on government spending and government hiring, especially. So we're going to look for that part of the GDP to probably come down, which is what the Fed in Atlanta is looking at. And then the last portion is what they call X minus N, net exports. This is the difference between exports and imports. If exports exceed imports, it's a positive contribution to the GDP. If imports exceed exports, it's a negative contribution. So we're not going to find any help for increasing our GDP in this category, especially right now. In fact, imports of goods and services in the U.S. surged by 36.6 billion or 10% to a record high of 401.2 billion in January, as businesses and consumers rushed to make purchases ahead of the new tariffs. The influx of imports in January was widespread. Goods imports rose by 36.2 billion, driven by a 23.1 billion increase in industrial supplies and materials, with shipments of finished metal shapes rising by 20.5 billion. Additionally, imports of consumer goods climbed by 6 billion, fueled by higher demand for pharmaceutical preparations and cell phones and other household items. Imports of capital goods grew by 4.6 billion, primarily due to the increased shipment of computers, computer accessories, and telecommunication equipment. So when we evaluate the component of GDP in aggregate, consumption, investment, government spending, and imports and exports, it's not surprising that the Atlanta Fed has revised future GDP readings down. So you think about, are tariffs the cause for a slowing economy or declines in the markets? So I thought about this quite a bit and spent a lot of time looking into it. I think back to everything we've talked about for the past year, and I think it's just culminating right now, and it's going to be very interesting times moving forward. Okay. So maybe these tariffs are a catalyst, but I think, we need to conclude these other factors, such as the sky high valuations of certain stocks, especially the Mag 7, that are now reverting to their mean. And how about record amount of government and household debt that will now need to be paid back at higher interest rates because interest is starting to come due. And I think Trent and I were talking 10 billion. I forget how much that was, Trent, coming due this year.
Well, in the next 6 months, I believe it's 7 to 10 trillion.
Yeah.
That has to be refinanced.
Yep. Yep.
I mean, I have that money, but
every dollar we have to pay for debt robs us of money that can be committed to growth. So, and what about inflation? For the past year, financial media and Fed has been falsely telling us inflation has been coming down, but in fact, it's only the rate of inflation that's been slowing. However, over the past 6 months, we've seen the rate of inflation actually increasing. Then we have the housing sector and construction spending, which has been slowing. Existing home prices have been falling, and the time a property sits on the market has been increasing over the past year in certain parts of the country. As goes housing, goes the economy. Then we have manufacturing, okay, U.S. manufacturing, which is, in my opinion, has been in recession for a while. Maybe we'll see some process as companies move production back to the U.S., but that's going to take some time. In fact, just this week, though, we've seen even more companies pledging to reinvest in the U.S. because of the threat of tariffs. Honda will produce its next generation Civic hybrid in the U.S., state of Indiana rather than New Mexico, to sidestep tariffs on one of its top-selling car models, report Monday said. Also, Taiwan Semiconductor chip manufacturer will invest $100 billion in the United States. CNN analyst Elena Tree noted Taiwan Semiconductor is making an investment over a 4-year period. The investment will be used to build out cutting-edge chip-making facilities, such an expansion will advance long-pursued U.S. goal to regrow the domestic semiconductor industry after manufacturing largely fled to Asian countries. And then just yesterday, Siemens plans to invest $285 million in manufacturing in the United States. Tech company said Thursday, including 2 new facilities in California and Texas. The U.S. is the largest market for the company. The recent investments in Siemens' U.S. manufacturing footprint and the planned acquisition of Altair, a Michigan-based software company, mark more than $10 billion investments in the U.S. Siemens plans to open 2 manufacturing facilities for electrical products in Fort Worth, Texas, and Sonoma, California. The company said it expects its latest investment to create more than 900 skilled manufacturing jobs with equipment produced in those factories supporting U.S. commercial, industrial, and construction sectors. The move will also allow the company to power AI data centers. So this type of investment will eventually add to our GDP and job growth. Combine this with reducing our national debt through cutting unnecessary spending, and we could get back to 3.5%, 4% GDP growth for the country at some time. In the long run, maybe tariffs are not the long-term problem, but the eventual solutions. So, from my point of view, as investors and traders, we need to manage risk and preserve our hard-earned investments utilizing solid market investment and trading strategies. This includes understanding the micro and macro issues of our economy, which we try to do on the Platinum Channel, combined with the fundamental and technical analysis of markets and investment vehicles such as stocks, bonds, crypto, whatever it is. And this is why we have the Platinum Channel. So that's my rip for today. Took me less than a half an hour. I'm going to open it up. What do you guys think?
Chair,
Go ahead.
I
Bob?
want to show you guys something. See my screen?
Yep.
So these are delinquencies in housing, since you brought it up. I was looking
Yep.
at this today. And the blue line is basically FHA conventional delinquency rates. And if you go back here to 2006, we're at 929. We are presently right now at 841. Okay. And 2000 and the VA, these were the VA, the purple line, 265 at 208. So we're upon the Great Recession. I'm just pointing this out. Just wanted to show you that. It came out at 11.3% on the delinquency rate that we're at today with mortgages. That's pretty steep when the norm is 3%.
Yep.
Why?
You
Because
said
there was,
11%?
Yeah. 11.3.
Wow.
Yeah.
And we've been talking about this for a while, and we've been watching it for a long time. And Bob, you've been talking about it in manufacturing for probably a year, you know?
Yeah.
At least.
So none of what we're seeing here, especially in the markets, and I'll get to some charts and show you where we are. We're at some critical levels, technically speaking, and then you guys can tell me what you think. Where we are, you know, and I just think it's a culmination of a lot of stuff we've talked about with a catalyst of maybe tariffs and other things going on.
We're in it. We've been in it. And now, like I told you the other day, when they say all of a sudden everybody starts saying the word recession, that means to me, okay, we're almost at the bottom here. And that indication right there, it starts to show me that we're about there. We're pretty close. Some people feel it, other people don't. And it depends on what sectors you're in. You may not even feel it.
I don't think we're there, Bob, until we see the unemployment start to rocket up. And then I think that will be the last leg of recession.
Yeah, I think that's gonna start within the next 3 months.
I think it already has.
Yeah. Well, it has today when you saw the revision of the numbers and everything. It's
Right.
not good. But to see that real steep jump, I think you're gonna see it within the next 3 months. We're at the start of it. But to me, we've been in recession, and that's the typical scenario.
is it based on, you're saying on that debt chart that you just showed up that showed variable and fixed loans are going to where, when we had our last recession, it's in the same neighborhood regarding, you know,
It's
is much.
approaching, yeah, it's approaching, it's within less than 100.
Right. The previous one is 2006. I mean, did it show the previous recession year?
Yeah, 2006.
Okay,
I was
so, yeah,
pointing at.
okay, okay.
You want me to show you again?
I wouldn't mind it, but people don't.
No,
Yeah,
go ahead.
please.
Go ahead.
Yeah,
I think this
was
is
kinda-
very important.
Yeah.
I don't think we've seen the blood in the streets, as they say. I don't think the tide's gone out.
Well,
Well,
can I
I
just
think
say
that
I don't even
something?
think
Bob
we're
is showing
near
a
it.
metric.
The Great
Bob's putting up a
Recession
metric.
didn't
That's
start until 2007. I think we're just at the very beginning. Where we
2000,
get into it, where these people start jumping out the windows is 2007, 2008.
well, Bob, I know you're upstate New York, and I was upstate New York when we hit the Great Recession. I was in Greene County. I don't know what county you're in. But Greene County saw it in 2006. And that's basically between 2006 and 2007, you can see here is when it started. It was really hit in that area there.
It looks to
Okay.
me like 2006, it started coming down the debt. So if I
It
had to say,
did. It
yeah,
was at its peak.
perhaps that, yeah, like 2006, it's at its peak for the blue one, and then the other one's already going down to I guess the variable.
Yeah.
So it looks like 2004 is the peak for, I don't know, is it the bottom one, the variable?
The market didn't get hit at that point. When you started feeling the market, it wasn't until 2008, 2009, right?
That's
Wasn't that
correct.
right?
That's what I'm saying.
Yeah.
And Bob, I come from Chautauqua County, which is an extreme western part of New York State, almost as in part of Pennsylvania.
That was in Greene County.
And you're farther east.
Yeah.
So we got a pop in 2020, right? You see that big pop there?
Yeah.
Is that COVID maybe?
That's
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 COVID.
pandemic.
That's
So
pandemic.
Okay, so during the pandemic, I'm just saying this stuff out loud. During the pandemic, this chart shows that the debt was at a peak and then the debt went down. So one might say that as the debt goes down, the market recovered and now the debt's going back up. And
And the
it's
crash
like,
is in it. We're imminent of a crash. That's my opinion.
right, on this metric. Yeah.
Yeah.
Okay.
I think
Very cool.
during COVID, didn't a lot of loans get delayed? You didn't have to pay, so
Yeah.
Well,
the amount-
they had to refinance them, remember?
right. Yeah.
They had a
Yeah.
bailout,
Well, and you
government
think about
bailout.
it,
They're starting to
during
do
that
what
period of
Trent's
time-
referring to now. He's saying they got to get that number down to get all these people refinanced for these arms, right, Trent?
Yeah, exactly. But a lot of this is corporate debt that is a 5-year term. Well, where are we at? We're at a 5-year term again. You know, that debt is now rolling over. It has to be refinanced. And when you finance it at probably for a corporation, probably, correct me if I'm wrong, Bob, anywhere from 1.5% to 3%. 5 years ago. Today, you made the comment on the Morning Edge this week, 9 to 12% now.
Exactly.
So you gotta make this happen. Plus, you have what 7 to 10 trillion in U.S. Treasuries rolling over. You got to refinance that as well. So I think this is this. You know, I saw a headline that said Trump is trying to crash markets, and I'm like, yeah, he is. He's trying to deflate the balloon
Yeah.
so that we can restructure at a better rate so we can then reorganize and start building back. But it's always looked at as a negative, but it's sort of like my friend said, who's part of Rocky Mountain National Fire and Rescue. He said, we had 1,000 homes burned down in my neighborhood and around the Boulder, Denver area, 2-3 years ago, because nobody is willing to do some controlled burns. They're not willing to burn this out. And that's where we're at right now. We need a controlled burn.
The market is pricing in a market increase, right? Isn't that what the narrative is? Not right or wrong. I'm pretty sure.
What do you
that's
mean
what-
marketing increase in what?
Sorry, percentage increase.
In yields?
In yields?
Prime rate or some, I don't know. Fed, you know how the Fed controls the rate?
Interest rates is what you're
Trump
saying.
wants it to go down, not up.
No, but I'm just saying right now, the last note that the Fed had said was,
Yeah.
geez, we're gonna have X number of increases. But I think what we're saying
Oh,
right now is
decreases.
Yeah, it was
Two.
decreases.
decreases.
Yeah.
Okay,
Two.
but take into account what the Fed funds rate is, the lending rate to banks, and then banks turn around and take that money, multiply it a number of times, and then lend it out to us. Well, they're looking at it going, what's the biggest benchmark? What's the benchmark that we benchmark our loans against? And it's typically the 10-year US Treasury. And when you look at, the peak of 10-year Treasuries at 5%, today, I think the 2-year we're at 3.97, which is interesting. the 10-year is at 4.28. You add
Actual mortgage
100
right there.
to 300 basis points to that. That's the bank spread, typically, depending on credit. They got to push this down. And I really believe that if it's not government induced or bank induced or whoever, but they're going to do their damnedest to push this 10-year yield down so they can refinance this
Did
debt
anybody
as soon as
listen
they
to,
can.
did
If
anybody
they
listen
don't,
to Bassett this morning?
what's that?
Bassett was on CNBC this morning at 7 a.m. for 45 minutes, and he admitted on CNBC that they are doing exactly what Trent said. They are pushing and trying to break it, and they said there may be a little bit of damage, but they're the damage would be recession, but he thinks it's controlled. You're absolutely right, Trent.
But
I think
This is controlled right
recession's,
now, and they're controlling that 10-year to push it down so people can afford mortgages. It was very interesting. And the other thing that I got out of that whole speech from him, that they're talking about bringing Bitcoin. I know that I'm going off key here,
Going on a
but
tangent, Bob.
it's
Bitcoin,
fine.
Bitcoin, they're talking about bringing it in-house. I think that that's a bad conversation for Bitcoin because the whole idea of Bitcoin, so government doesn't control it. And what he was saying this morning was they want to bring it in-house and control it like the dollar.
They can't
Oh,
control it. How are they gonna control it, Bob?
Okay.
We're going off on a tangent. I think we should stay
No,
on the
no,
bigger
no, no,
subject.
no, no, this is
Uh,
this is open discussion. Because they're having the big crypto
Anyway,
conference today at
I
the
just
White House.
want to tell you guys, I'll put a copy of this into the chat. I think that this article on mortgage delinquency increases in fourth quarter 24 is very pertinent to where we're going and what's coming.
I think when you look at what Trent was just talking about, I mean, it's gonna hit the small companies first. These guys don't have the money, these zombie companies, these small Russell 2000. And that's why you've seen the Russell just die. Okay. But it's also hitting the S&P 500. And we were fighting on the S&P 500, the 200-day moving average. And if we get down below that and sustain below that, technically we will be in a bear market for the S&P 500, technically speaking, from technical analysis. Now we've hit it pretty close to 3-4 times. We went down under it today. We're popping back up a little bit. Let's go see what the Qs are doing because they finished up.
Mark, isn't it a function of what the Fed is doing with pushing down the rates and everything? What's happening in the markets?
Not necessarily.
We're dumping. Everything is dumping. What I'm seeing, a lot of these stocks are falling below the 200-day, and I'm not talking about your stocks, Paul. I know yours are all above them, but.
Well,
But I'm just wondering if this is a function of them pushing down on the rates.
I think part of it may be, but I think a lot of it is high valuation companies, especially Mag 7s, coming back to the mean. Okay. That they're not making as much money in a percentage as they used to. And there's questions about that because competition in the AI world, which has been pushing these markets up, 7 stocks, are not pushing it up anymore. They're pushing it down because this is your Qs, which is 50% Mag 7. Okay. And it closed below the 200 yesterday. Now it tried to go up and hit it, and it's still not below. It's following its trend line down. Okay. 50%.
I'm not
Here's
surprised at that.
Here's NVIDIA. Okay.
Yeah,
Well,
exactly.
that's not NVIDIA. That's a different NVDA.
That's not.
I think everybody agrees the market's going. It's
Well,
how
look,
far going down. How far is it going to go down?
look at, I mean, NVIDIA's in a bear market. as far, technically speaking, it's under the 200. Let's go back 5 years. Oops, let me get rid of that stupid
Oh,
thing.
I would have bought Nvidia 5 years ago.
Well, if we could go
Think we
back,
all
we'd buy a
would
lot
if
of
we
stuff.
knew.
It hasn't been under the 200 since 2023.
Hmm.
Okay, and it's been just on a rocket. Now look at it. So, and what does that do, Bob? It since it's, this is 6% of the S&P from a market cap point of view, and that's what it's going to do to the S&P. When you have so much money and so few stocks, the same thing happens at the Great Depression. We had so much money and so few stocks.
So
So-
what do you believe will be a catalyst to turn this thing around? Like my sense is it'll continue, but what will we need in the market or wherever? What are some thoughts on what would make it
Quantitative
turn?
easing,
Yeah, can I just say something? Right
Easy.
now,
Please.
from money managers I'm listening to, they're looking internationally and they're looking at Europe. Look at all the places that are in recession right now. And what are these countries doing that are in recession? They're pushing their interest rates down. And it's not before long, our 10-year is going to start following the same trail and our interest rates will become lower so that we.
What countries are in recession?
Germany
Oh,
is.
most
Germany,
of Europe,
France.
Germany.
Germany
Yeah.
for sure.
I mean, you think about China is actually
China
starting to
just
come out
coming
of a
out.
recession.
Yeah, it's coming out.
Yeah. So, that's the thing. I think what you'll see, in my opinion, you'll see this continued push of the 10-year yield lower through August, September, and then you'll get markets down to reasonable rates, reasonable valuations, and then you'll have the Fed come in with some sort of quantitative easing and pump money into the system again and basically jumpstart the economy again. What it creates is an incredible opportunity to buy great companies who will be a part of this technology evolution and really everything down to reasonable rates again. But the problem is that it hurts and that a lot of people are going to get caught up in it, not thinking, that whole buy and hold mentality, which is great. And I think you should have exposure, at least, if you got the AI stocks or whatever, you should have an exposure of 1% overall of your capital in those companies you feel good about, because you can manage that fall, that decline. But as we get to a bottoming, which probably will get close to July, August, that's when you start to look for good opportunities and you start dollar cost averaging in. My belief is it's the same thing. I remember sitting in Birmingham, Alabama in 2000, and the news, CNBC, markets it's all death. It's all the world is ending. And that's when you start to see the bottom. And we saw that during the housing crisis. You see people wheeling all their stuff out the front door of the house they just got foreclosed on. When you see that death, that's when you'll see warrants start coming in, and you'll see the jets flying into Omaha and people wanting to borrow money, and you'll see him starting to make deals, and you'll see that's when the buying will start happening. And that's,
And that, yeah,
I think
and
we're off a
that'll
little
happen.
ways.
And that'll happen though. I think the catalyst for that will be when people start losing their jobs.
Well, tell me
Does
something,
anybody know why
something we
banks
haven't
are
talked about.
taking
How
over?
much margin do we have going on in the stock market right now?
And
Oh,
derivatives.
Does everybody
derivatives.
know 5 banks were taken over last Friday?
Well, you
No.
hear it underneath the desk, but you don't hear it on the screen.
What
Five
banks?
5 banks. I don't know which ones.
I'll
5
have to
of
look
them
that
were
up.
taken over. You can probably Google it. 5
Yeah.
banks last Friday.
Okay. Wow.
It's definitely time to be cautious and put your risk management plan in place. And it's treasury bills, although they only 30 days only pay me 4.35% or CDs. It's better than nothing, and it's certainly better than watching your Nvidia stock go down.
So
Well, and if
mergers and buyouts, maybe that's what we could expect.
Well, you're gonna
yeah,
have to
I
have
think
money.
you'll
You're
see
gonna have
some
to have money.
consolidation of certain industries, if you think about the whole tech boom during the dot-com, the late 90s into 2000, how many companies came out of the woodwork, right? And then all of a sudden you had massive buyouts, you had massive bankruptcies. You think about the AI thing we've been in for what, 2.5 years? I mean, very short period of time versus the dot-com boom. We're going to see the same consolidation. It's just a matter of identifying the healthier ones out of the bunch. And I think that's where we're at right now is, I'm tracking a handful of companies and I'm seeing their prices just getting annihilated. But I believe that's part of the tide that's pulling out. Is now look at the fundamentals. And I think, Carrie points out that that's a great Walmart went private.
Not
Is
Walmart,
that what you?
sorry. No, that's not, I made a
So it's
typo.
like, okay.
You
I was
didn't
like,
see it.
holy
See that made it go. Not Walmart. What's the other firm? Walgreens.
Walgreens, yes.
I don't know if I'm trying to
Yeah.
think. Yeah.
Private equity, are involved in those things.
Which also I'm wondering, could be a bad thing as well. Three of my favorite companies growing up was Quicksilver, Billabong, and Volcom. All three got bought up to the same private equity group. They all filed bankruptcy last
Yep.
week.
When private equity gets involved, they're either there to chop you up and make money or to build you up and sell you at a huge profit. Those are the two things that they do.
Oh,
Yeah.
they have an agenda when they buy you.
Yeah.
They've already looked
they have
at your balance sheet and then your profit and loss, and they've made decisions upon that data on how they're going to chop you up, right?
Yeah. Did you
Right.
see, did you guys ever see the movie Office Space?
I did.
Okay. Office Space is about a tech company in Texas, and they brought in some consultants, but basically I worked for a big brokerage firm, Ameritrade, and Bain Capital came in and bought up a part of Ameritrade. And we had to go into the office and justify our jobs. Just, what exactly do you do here? So that they could cut it down and move as much stuff to India as they could. It was almost like deja vu to me. It
Like
was,
Elon.
we actually made
What is
fun of it.
Elon doing? He's
Yeah,
doing the same thing.
we actually made fun of it,
Give me
but it
5
ended up.
things you did last week.
Got to
So
do it on
they,
an email though.
Yeah.
so they ended, yeah. So they ended up, build, making it more efficient, cutting costs, cutting people, and then they sold it off to TD and then took a big profit and got the hell out. That's what they did. And now, TD Ameritrade doesn't exist. It's bought by Charles Schwab.
Yeah. Yeah. I think what we have to anticipate is we've had a sizable drawdown this week. Volatility has been through the roof, getting into what I refer to as the F bucket. I mean, edging towards it. I wouldn't be surprised if next week, as long as something doesn't blow up over the weekend, we see a rally back up to resistance again, sucking people's optimism back into the fold, and then another drawdown into the week after.
Yeah, but why would you rally up? Why would it rally up?
Because I'm an institution, I can make $7 million this year if I can suck your optimism in,
Yeah.
and I can trade against you. That's Wall Street.
Nah, I don't think they do that. I don't think.
Oh, come
Are you
on.
serious?
No, they do that.
Oh my God.
They absolutely
What is
do that.
what's the line in
boy.
Wall Street? What's
I've
the
seen it
line?
happen.
Greed.
I've seen it.
Greed is
happen.
good.
Yeah, exactly.
I mean,
Let me
there's
get
a
the phone.
video.
Let me get the phone, right?
I wouldn't trade based on that. I wouldn't trade anything saying, geez, the market's going to go up on Monday and then it's going to shake somebody up. You don't trade that way.
No,
That's what I'm saying. As a retailer.
They
As
do
a
it in the
retailer.
morning. They run it up early in the morning, right? Before the market opens. Everybody says, oh, we're going up today. And they jump in, right? And then within the next 15, 20 minutes, they're selling everything.
It's 9:30 Central.
There's a video out. There's a video out that you can go watch. It's old Jim Cramer video when he was a hedge fund manager. Yeah. And he talks about how they could manipulate the market and pull the rug out, and they'd watch, level 2, and they could see where and I've seen it happen. They do it. And I'm with Paul, though. I'm looking at, for me, Paul, we're in a neutral zone from a market in general. And it's the 200-day moving average. And that's it for me. If the SPY goes down below it or the Dow and we can't get back above it, then we're going to have continued down in the market in general. We'll still find some companies we'll be able to trade for sure, but it's going to be less amount of companies. But that 200, and I told Trent before the call, I said, I feel like I'm sitting in the neutral zone and we are the Klingons and the Romulans are on the other side. We're just sitting there waiting for which side that thing's going to move on, and whether the battle's going to be fought. And we haven't got there yet. And I'm watching it, and that's what I'm going to do. I'm going to watch it until the chart tells me something, Paul. And that's what I'm going to do.
No,
But
no,
right
you
now,
had mentioned that unemployment would be kind of another metric that would indicate where things may get worse. Do you have a
I think
graph
so.
or anything that may say, oh yeah, unemployment kept on going up and during this year, 2006, sort of similar to what we've seen with that debt graph? Is that something you just recall?
I think there's probably a Fred chart that shows that, Trent. I don't know if you can bring one up on unemployment because I'll show where the recessions are.
Is that something that you kind of recall in the back, seeing that
Yeah.
happen? Oh yeah,
Yeah.
okay.
Yeah, it's a
Okay.
leading indicator. If people lose their jobs and you can't find replacement jobs, which from what I've been seeing and reading, it's harder, it's taking longer to find jobs to replace your job now. Okay. And then some of the jobs aren't paying what you wanted. So your lifestyle is going to be either equal or lower. And
Paying what you want? No.
yeah,
Paying
and then
less than what you
yeah.
want.
And then that doesn't reduce your debt that you've made, prior to this. And so it's a leading indicator to me, unemployment, that we're going to have some trouble in the housing industry. We're going to have trouble in the automobile industry and consumers in general. And if you look at, you do what I do, Paul, we look at sectors. If you look at consumer staples, that's about the only sector besides a couple aerospace companies that is actually doing halfway decent, because people are still buying soap and food and, dishwasher detergent because they have to. You look at discretionary, the discretionary, it's gone down because people aren't buying, stuff they don't need anymore. My opinion, looking
They're
at
not
it.
even out at the restaurants. The restaurants around here, I can get into the good ones just by showing up.
That down in Florida or in New
Yeah,
Jersey or
Florida.
both?
In
Oh, really?
Florida.
It's because they got a
All
table
the
for
great
Bob over there.
tops are down here now, you know?
That's Bob. Bob goes to those restaurants where he can pull his yacht up right in front of him.
Yeah,
and then go in
there's
and get
Bob's table.
Yeah, Bob's there with all his nieces. With all his nieces.
Hey, I like good restaurants.
Here we go. Okay.
So this is all employees, total non-farm payroll. Is that what you're talking about?
Is this unemployment?
This is employment.
Oh, we want unemployment rate
Okay.
if we can. Can you find that?
Yeah.
It would be by
You can see that dip right there.
Yeah,
That was back in
that was
2000.
COVID. There you go. Yeah.
So
see where the
unemployment. This is April of 21 was at 4.4%. I mean, April of 01.
And that's a recession right there. Those two lines.
Yeah. And it peaked out in July 2003 at 6.2. And then we started again October 07 at 4.7. We peaked out November 09 at 9.9.
That's a recession.
And of course, the pandemic. Yeah, that was a recession. Pandemic as well. That's sort of oddity kind of work kind of thing.
But look at go back to like the 2000 there, Trent. See where it started? It was down low before the recession. Then it started going up. And then, recessions don't get called until they're almost over. And so you can see where towards the end of the recession, how high it was, and it went down.
That's
and
exactly
you can see where,
my point.
Yeah, exactly. Yeah.
So we're here now at February 2005 at 4.1%.
Yep.
So it's a good indicator to watch. 80s. Wow, look at that period of time, 1969 to 82. How many recessions we went through?
Yeah. Well, recessions are normal for a business cycle. We just stopped them because we put in federal policy that for interest rates, it had zero interest rates, and that's that's why the bubble, in my opinion, got so big where we are today. And Besant was talking about that yesterday at the Economic Club of New York, how big that got.
Yeah.
Yeah,
Listen,
This is
it's a control
really.
if they can.
but when you
Go
look
ahead.
at this trend, there, it's different times right now, right? If you go back to 2005, 2006, we really didn't have like AI, the internet systems we have today, the engineers that we employ, and all the different people that are employed in all these different companies. That didn't exist back then as it does
Yeah.
today, you know?
Mm-hmm.
And if you go
Yeah.
further back, none of that existed,
You know
right?
what else?
Mm.
You know what else we didn't have, Bob? $37 trillion in debt.
That's that too.
Yeah.
Yeah. And
Yeah.
that's
Well,
a big problem.
you think about from this period of time, so say October of 09 to where we are today, the amount of cheap money that has come into the system in that
Basically
period of
zero.
time.
Yeah, basically zero interest rates.
Fed funds. See if I can find the Fed funds rate.
These Fred charts are awesome. If you guys haven't ever seen them before, they're really kind of really good.
They can scare you.
They can, but it's from the federal. I think it's from the St. Louis Fed, so they're pretty cool.
Let's see here. I was trying to find the Fed funds rate over that period of time. Um, so I don't.
It's called the overnight rate. Maybe that's it.
This one.
Yeah, that's it. That's it right there.
So, well, how far can I go back? So, this takes us back to 2014, 2013.
Yeah, it
You
was
can see the
right after the
expansion.
yeah.
Expansion. Well, no, this is the rate. The rate went up. This is them raising the rate.
Well, but go back to where the pandemic was. They dropped it right down. 2020, right there. No, keep going forward, right there.
Right here.
That's where they
Yeah.
dropped it to zero again. Okay.
So it was 1.5. It went wow.
But
Yeah.
they were
So
dropping
we
it
had from
before in 19 because we were going into recession in 19 before the pandemic. So they started dropping it. You can see where it always plateaus. They start dropping it. They were dropping
Yeah.
it because we were heading into recession,
what
and we
was
did.
this? Yeah. Interesting. Yeah.
But look how that whole rate. We raised rates faster than we've ever had. In a short period of time. You saw it right after the when we got into 9%. Inflation month over month.
Yeah.
So all this stuff together is why we're seeing what we're seeing right now, I believe. And can it be fixed? Sure. Can it go back up? Sure. But again, I feel like we're in the neutral zone with the Romulans and the Klingons, and I'm just waiting to see how these major indices go either up or down off that 200, because the 200 is so rare, especially for these indices, and they're playing around it right now. But if they get below it, I see it and they can't get back up. They retest it and can't get back up. We're going to see more pain to the downside. Right now, they're playing with it. It hasn't decided which way to go yet. So that's why I'd be sitting and watching and waiting and being patient right now, my opinion.
Yeah. Yeah, I think it's interesting. I follow a guy named Jim Cresson, CEMKRSEN, I think is his name. He owns a company called Chi Volatility, and at one point he was a market maker, and his company was the largest market maker for options on the CBOE. He represented 13% of all of the option transactions in the world. And I follow him a lot because he's got engineering background from Rice. He's very structurally driven. And he pointed out, he said, you look at the explosion in the derivatives market since 2020 and how easily that has become accessible to people. And then now you have the 0 days to expiration options as well. It's becoming a bigger market than actually at times the bond market is. And this is in the bond market it's a term, it's a 30-day or it's a 1 year or a 2 year, 5 year, 10 year, 30. Options are a day, a week, a month, and they have decay elements involved. There's multiple situations with it. And it's become such a big part of how market structure is designed and built. And we come into these periods of time like this quarter where you're seeing these massive expiration dates, 2.7 trillion that they represent in contracts expiring. And we're getting into triple witching, which is the 21st, I believe it's 21st, and that's equity indexes and derivative future contracts all expire on the same day. And that is historically been most of the time, a volatile period of time. And I think as we are coming into this quarter, which is sizably one of the biggest expiration quarters in history, expect more volatility. And that's where I go, today after lunch, 1:30 Central, I'm expecting fireworks to some level. And as we get closer into the triple witching, I think we could start to see that downward pressure, that volatility really accelerate. And we can get that capitulation in the next, 30 days or so, which creates incredible opportunities to buy good companies. But
if you have
a
money
drag through the
yeah.
summer. And I expect it's that whole sell in May and go away, come back in October and start over. I really think this could be that summer, because people get so freaked out over the summer and the big institutions build positions through summer, and it starts picking back up as we get into possibly quantitative easing by the Fed, along with reasonable pricing, and we start to see this thing kick off. And it's something that I think you said, Mark, or somebody else said over the last couple of days. If you're a president, you got a 4-year term, when do you want all the bad stuff to happen? You want it to happen in the first year. You want to you ridiculed the first year. You want to get things to where you want them to be so you can build the next 3. And I honestly think that's what we're seeing, So if it makes our country stronger, in the long run, heck yeah. I'll suck it up.
I think we're gonna get freaked out before the summer. I think we start getting freaked out now.
Do you think people are freaking out? I mean, my social group is very small.
I don't think we've seen capitulation yet, for sure. You'll know it when you see it.
Yeah.
It'll be a free fall. I mean, a real free fall.
Well, I go back to the whole DeepSeek Monday for NVIDIA. 850 million contracts traded. The last couple weeks, maybe 400 million, maybe. We're having real low volume days in the last couple of weeks. So you want to see billions selling off. We want to see S&P.
Yeah, it's got to go above the 200 and just keep rolling. And right now it's at decision point. And Corinne and I were talking about this yesterday. I think we talk all the time. Watch CNBC or Fox Business. They have all these analysts come on and, this is a great time to buy this one, buy this one. I'll go and I'll look at the chart and I'm like, what the hell are they talking about? There's no way I'm buying this, but that's what they do. There's no money in selling. Okay. They want to pump up their stocks and pump up their portfolios. And I'm like, you gotta be kidding me if you think I'm going to buy that, but how many of them actually go and say, you know what, you guys should probably, you guys should probably put some money on the side and hold off for how many? Has anyone
You-
heard
you
anyone
know
in the
what-
last
you-
month say that?
You want the biggest indicator will be Jim Cramer saying, "I'd buy more Bear Stearns."
Yeah.
You know, I'll buy more Bear. This is a bargain. Where's
Yep.
Bear Stearns?
They're gone.
Jim's the indicator.
Yeah.
Hey,
Jim-
Robert.
Yeah, don't
Robert
do
has
that.
to take. Robert asked to take a look at MARA, M-A-R-A.
Jim's
Can you
saying to
pull
be
up your
patient. He's saying to be patient. He's not saying to buy.
Bear? Yeah.
Okay, hold on. Okay. You're gonna get into one of these crypto stocks, which is pretty volatile.
Yeah.
And we've been watching this week, especially in
All
the
right.
morning edge. But you're right up against, you're up against resistance, and you've got some sells right above that. And again, crypto is pretty active over the weekend. I like the indicators, but I just don't like these resistance. And you can go all the way back and see what Bitcoin does, because these all follow Bitcoin. We've been watching it, and Bitcoin has actually held the 200. Okay, it's actually held the 9 for the last 3 days. It's been pulling back and forth, and the oscillators are trying to move up. I think we'll know a lot more once they get done with this conference today. What's going to happen, but that's a lot. It's very volatile, and another one that's 2X is MicroStrategy, which has been holding on the 20 for the last 2 days. But you don't have, it's related to Bitcoin, so you're gonna get volatility. But what I like about MicroStrategy, it followed Bitcoin, and it bounced off its 200, and it's above the 9 now. So it's in a play zone if you have the reverse strategy. It's not looking too bad, other than the momentum's right at 50. But again, you got your 50 as the upper level, and you're playing off the 20 right now. So these things are fast, and the thing about playing like a MicroStrategy or Mara or IBIT or anything is, over the weekend something could happen and you're stuck in it. With Bitcoin, you never know, because Bitcoin trades 24/7. And if Bitcoin takes a dump to 80,000 or whatever, then Monday morning you're going to see a big dump.
Yeah,
you know,
you
on
don't know what's gonna
MicroStrategy.
happen tonight.
Yeah,
They're having a great big summit at the White
Yeah.
House.
they're doing that right now. Yeah, and so we'll see. What happened today? Last night I think President signed a Bitcoin reserve executive order, and then he said we're just going to put what we've confiscated, and we're going to put that in, or 200,000, but it's not a plan to buy any. And I think that the Bitcoin maximalists are babies, okay? And I go, well, we want them to buy at $1 million. They're going to have to wait for that to go through Congress to be able to buy Bitcoin. They're going to have to get the Loomis bill through and all that. And so that's why they're like crying. And we'll see what happens at the end of this summit. But for me, from a point of view as a Bitcoin investor in MicroStrategy, I look at it as a positive, because it's now they have at least a reserve, okay, and it's sitting there. They're not going to sell it back into the market. So again, things are more positive moving forward, positive because they're talking about it with the government, with the industry leaders. That's more positive than not to me. So that's the way I look at it. Because I'm not a maximalist. I don't have everything I own.
Well, I totally agree. I think that that definitely gonna increase the value. I think it was Bob that he said that we all are here to make money. So
Yep.
I bought the Bitcoin when it hit 80 just a week ago or so. I thought that was the bottom. Was actually 78, and it just already started to increase. And I think, as you said, if they buy Bitcoin, then obviously the price gonna go higher. And in the right time, we can sell. If it's getting bad for the country or for us, we can sell it at that time. But now I think is the time to have it and wait for price increase.
I trade off the technicals, and I've said that my line in the sand was the 200, and so I've always kind of had nibble buy orders at the 200, and I've been hitting on it. Again, that doesn't mean this thing can't just tank through it, but you know, if I'm a technical trader, I'm going to use my technical analysis to try to, you know, I'm not buying one Bitcoin, that's for sure. You can buy $10, you could buy $100 if you want, you know, in Bitcoin because it's fractional. So again, it's not looking too bad. It's fought off the 200, which is better than the Qs have done right now. But again, it's volatile. You know, it's volatile, and I don't plan on selling any of my raw Bitcoin that I have right now or at any time. And again, I have a pretty good cost basis because I've been doing this probably since, you know, pandemic when we first started talking about it. So I'm not recommending it to anyone. It's not for the faint of heart. I can tell you that.
It like Bitcoin and crypto, it trades 24/7. I saw a headline today that the NASDAQ is really seriously considering that.
5 days
How
a week.
does that
5 days a
out of
week.
y'all's 5 days a week?
Yeah.
Oh, okay. So it will shut off on
24,
weekends.
24/5. Yeah.
Okay, so like future contracts, right?
No, they'll trade
Uh,
everything. They'll trade everything, but yeah, only 5 days. Instead, the weekends
No,
will be
no,
off.
no. What if future contracts trade 24/5?
Yeah, that's
So
exactly.
going to that, how does that change the investing landscape in y'all's opinion? Or does it?
That tells me you'd really want to use your stops and your you know, your limits because God, you could be at 2 a.m. and something happens and it's going to be instant. You know, it's not going to. Yeah. So I mean, it's going to teach a lot of people how to be more technical traders. I think. I hope.
Does it, from a long-term investor standpoint, does it level off the volatility any? Because there is no buildup before market open?
I think so, except for Monday mornings.
Right. You still see that with futures. Yeah.
Yep.
What would be the hesitancy of going 24/7?
Paul wouldn't get any sleep.
That's true. No, I find it interesting that they're considering that, and
I've been getting plenty
I
of
don't know
sleep
if
these
it's from
days.
I bet you have. Yeah. That's unlike you too. That's unlike you.
no.
Incidentally, I wasn't talking about trading. I was talking long run. And I
Okay.
Yeah.
dumped it in my IRA. So I'm planning to keep for 2, 3, 4 years. And hopefully when it is high, then I sell it at that time. So
There you go.
Yeah.
Okay.
There you go.
Stick to your plan.
Yeah.
So what else have we got 15 minutes left. What else can we do?
Dissect.
Well, I can show you a few. I can show you a few here. Let me look at a few here, just so we're not all negative. Okay, I try not to. Don't want to be negative all the time. There's some things out there, and a lot of what I find are under the 200. And Paul likes the momentum ones. We find a lot of those. But here's Mosaic, a fertilizer company, and for the last 4 days, you see it's gone up, even on dividend day. So this is our first candle close above the 9, and here's where you have some sells orders or sell orders here. Got, you know, the 50s up. Where are we at on the 50? 26.10. So you got about $1 to the upside where we are today. And then your resistance. So, you know, there's that. We've looked at this one before several times. This is LHX. This is a defense stock, got above its 9. Just keeps running. Now it's, you know, it's above its Bollinger, and it's above its where the sell orders are. So and we're getting close to resistance, but this was a nice run. And we've talked about this for a couple of weeks. General Dynamics looking the same. So there's stuff out there. And you know, we talked a little bit about consumer staples. Okay. It looks like it's flattening out as far as an index. But if you go within that index and you look at what's going on, these are things that people need. General Mills, okay, has come up. I mean, this is all during weeks when the market's looking like crap for most things. ADM, food company.
Hey,
Okay.
Mark, go back to the housing, the great financial crisis with this if you can go back like a weekly or monthly. I'm
This one?
curious to see how it, yeah, how it performed. I'm just curious how more consumer staples, those kind of positions did during the last major meltdown. If it was in existence. There we go.
We were right here.
So it went up,
yeah. Staples, got to eat.
That's right.
right?
Yeah. And here's the pandemic.
Huh.
Staples.
So
I mean, you
crazy.
think about it. You think about it, those are the things you need. You know.
Yeah. Shelter, food.
Yep. Shelter, food, electricity. You probably look at.
And a
let's
gun.
just- Yep.
And a gun.
And some ammo.
Smith and Wesson. There you go.
Yep. And some Jack Daniels. Here's this is utilities. So utilities actually, where are we at
Tanked.
here?
Yeah.
This is yeah, like everything else. So here we are.
What
Interest
was it? Huh. Interesting.
Yeah, I mean, so there are safe havens. But again, stocks go up, stocks go down. But like we always say, you know, there's value somewhere, but it just might not be a lot of them out there. BFB.
Yeah.
There's Brown Foreman. Look at this. At earnings and distribution. It's above the 9. It's under the 200, but everything's looking
What
pretty
does
good.
BFB do?
It's Brown Foreman. They're God, what do they do? I don't know, Bob. I'm a technical trader, but it's under consumer staples. You want to look up BFB real quick, Trent, and see
Yeah. Hold on.
what ConAgra. Look at that. Food. Okay. We talked about Campbell soup before. Campbell soup. Look at that. That's today. Earnings was 2 days ago.
Wow.
So there's always something out there, but it's hard to find. Like, right, Paul? I mean, finding them is hard, and then pulling the trigger on them sometimes when the market's going down is even harder, you know. But they're there. I mean, money moves to where the value is.
Let's see here. Brown Forman Corporation is a major player in global spirits and wine industry.
Ah, there you go.
What are the 3 things that do well in recession?
Yep.
You need that?
God.
Alcohol, cable
Yep.
TV, and religion.
Yeah.
When is the Catholic religion going public?
You need
Yeah.
you need McDonald's too.
Yeah.
McDonald's.
Food.
So let's.
Food. Yeah, that's
I mean,
right.
here's Constellation Brands. This is going to be a nice one. Look at that. This is beer and wine, Constellation Brands. Look at that. Today, it's above the 50. This will be one to put on the under 200 list. You know, it's got
Constellation, I thought the last report that came out with a lot of the spirits companies are reporting a pullback in alcohol consumption.
they
That's
might
right.
be, but I think, like Trent said, during recessions and bad times, or what concede bad times, people stay at home and they drink at home. You know, and like you said, Bob, no one's out at the restaurants, but I bet they're still eating and drinking at home.
Yeah.
Unless it's a cheap restaurant, then you talk.
Yeah. Yeah, look, I wonder if there's a George Thorogood indicator, you know, that song,
could
I
be.
Drink Alone.
I drink alone, yeah, probably. But you know, yeah, I mean, let's look at, what is it? This is the cigarette company, Motria. Look at that. So I guess they're smoking too.
Right.
So again, these consumer staples. So that's only, I mean, it's hard to find, but that's only one sector out of 11 in the S&P. And there's some in the medical side too, but they're starting to flatten out a little bit, my point of view. But they're hard to find, you know. And then again, well, here's Here's, let me show you this one. And Paul's talked about this one. J&J. But again, it's hit resistance for me. And then it's come up, it's played around where the sell orders are and stopped. So for me, J&J, unless this moves, it's going to go like this and probably down. In my opinion, I'm seeing a little bit of a curve on the MACD, so J&J had a nice run. Look at that. We talked about it way back here because I put a trend on, or all the way up to the 200. And look at this, gets up to the 200. 1, 2, 3, 4, gets past it, does a back test, finally gets past it, up, back test again, and then it takes off a little bit. That's what we're looking for, these back tests, especially on the 200. This is such a hard level to either move above or below, but once it goes, it goes. And that's what I'm watching on the S&P, and that's what I'm watching on the Qs, for the major indices.
What was J&J?
What's that?
What was it? What was?
That was J&J, Johnson.
What is it?
It's a pharmaceutical company.
Okay.
Yeah.
Baby powder.
Johnson and Johnson.
Yeah. A
Oh,
lot
Johnson
of
and Johnson. Okay.
Band-Aids.
Yeah.
you could call it consumer staples, basically too. You need baby powder if you're gonna have a baby. Even though I think they got in trouble for that, didn't they have to take it off the shelf or something?
Talc powder.
Yeah.
Yeah. Well, anything else that we could do? I'm exhausted. This market exhausts me. So Trent is going to run the 3 o'clock show, and I'm looking forward to that. So Trent, you want to give us a little preview? You want to give us a preview of what you're
Yeah.
doing?
Sure. At 3 o'clock, what's coming up? I'm going to hit upon overall the week in the markets, what is happening in general. I'm going to talk about the volatility because I do think that's very important and is insightful. I'm going to hit upon a handful of Kerry's companies in his portfolio. I'm not so much on the fundamental side, but I'll try to hit on a couple, and then I'm going to hit on a couple of ideas that aren't right to buy today, but could be in line as things get better priced. And then roundtable discussion about what you all want to talk about. So I'm going to go through Kerry's portfolio and just pick out a handful. Iran is one of those going to hit upon. Some of the non-Mag 7 stocks that he holds, and just sort of hit upon the charts on them, but also just emphasize, possible buying opportunities, price targets, that kind of thing.
I'm very excited because Trent gets to be Johnny Carson, I get to be Ed McMahon on that one. It's kind of reversed on this one. So
yeah, I hope they show up because I've on the videos we've been putting up on the YouTube channel, people are like, "Where's Kerry? Where's Kerry?" I'm like, he's relaxing. Please, let's let him relax. So
What a week
anyhow,
to
but yeah,
relax.
yeah, no
yeah.
kidding.
So he made a good decision selling off a bunch of stuff
Yeah, he did. Yeah.
last yeah. So but yeah, that's
You mean he
the
sold
agenda at this
stuff?
point.
He sold stuff?
About
Before he
200
left,
grand.
He sold a
Wow.
bunch. Yeah.
Yeah. He wanted to raise cash, and I think he's just he was the happiest I've seen him in a long time on the Friday call prior to going on vacation.
He was
He's
relaxed. He
been
was ready to roll.
he was. He very stressed.
Yeah.
So it's good. I'm glad he did it, and I hope he and my mom are having a great time. So it looks like they are. So it's all good.
So we'll have we'll do the 3 o'clock, and then we've been doing for 1 week now the morning edge at 7:30, and I'm happy that everyone shows up and we have good discussions. I appreciate everyone who gets up early and participates and brings ideas. It's a lot of fun, and hopefully that turns into something really good.
Hey,
Yeah, I
Trent,
like that 7.
Trent,
Yes, sir.
your dad is appearing on Facebook daily.
Is he? Oh,
Oh
I
yeah,
see that.
no,
I see the
I get it.
photos.
I get it. And I
Yeah.
told him I want a full book report on the ship.
Oh,
See, I love ships.
He'll
Don't
have
worry.
AI. He'll have AI do it.
Yeah, no, I mean, I do it.
Yeah. I suspect when I get a call from my mom, her tone of her voice and his voice will be a whole lot different. So
Well,
it'll
I
be
think
good.
he
It'll
got
be
into the
positive.
booze yesterday because, man alive, he had a hard
Did-
time keeping his eyes open.
Probably that, what's he call that? The periwinkle or whatever that whiskey
Per-
cracker,
Hey, but he told he's already thinking of
pepper
what he's going to
schnapps,
do when
or
he
I
gets
can't
back.
remember.
And
What?
what he's doing is he's going through all these 60 stocks, probably more, and trying to look for where there's decent buys. The question
Well.
is when is the decent buy? That's the
Well,
question.
when Jim Cramer says, I'll buy more Bear Stearns, but they
Yeah.
don't exist, Jim. All right. Okay. Thank you guys. Thank you for all your support, and we'll see you all hopefully around 3. If not, have a wonderful weekend.
Yep.
Thank you
All
very
right.
much.
Thanks a lot.
both of
See
you.
ya.
Thank you.
Well
See y'all
done.
later.
All right.
See you
Bye, guys.
guys.
Thanks.
Yep.
Bye.
Bye-bye.